All right, good afternoon, everyone. I suppose I should do a video today, just kind of recap the day. Uh, Lots of action on this day. This is a good textbook example of being bearish in today's market. You can easily be fooled out of your positions very quickly. Going into today and going into this particular conference with Powell, I was actually very bearish. Okay, I'm not gonna lie. All right, I had puts a modest position of puts into the meeting, and the first thing that he said was that there is well, I'll give him I'll quote him. One of the first things he said is that the it makes sense to moderate the pace of our rate increases as we approach the level of strength that will be sufficient to bring inflation down. Time for moderating the pace of rate increase may come as soon as December meeting. Okay. I was not expecting that at all. I thought he was going to come out and say, my message is the same, very similar to Jackson Hole. All right. And guess what? As soon as December meeting, the markets took off. All right. So we'll take a look at the charts and we'll see what's up for tomorrow. Now, you do have a ton of data for the rest of the week. All right. Starting tomorrow, you're going to have PCE. PCE data is a preferred gauge for the Feds. All right. He sounded totally dovish today, right? Just completely, he was even happy. It seemed like he was happy, he was relaxed, and the market took it very well. But anyway, tomorrow morning we have PCE data, all right, at 8:30 a.m. Right at that time, you have initial jobless claims, core PCE, PCE price index, personal income, real personal consumption, and then we have Bowman speaking tomorrow. As we head into Friday, there's going to be another big data, and that is going to be, if I scroll to Friday here, Friday will be non-farm payroll early in the morning at 8:30 a.m. as usual. I think followed by that, we may get other data of there's other Feds speaking on Friday as well. But the big one is your NFP. Now, this morning, today, if you guys saw the data, the market shook off the data today. All right. If you take a look at what happened this morning, we had GDP come in higher than expected, which is this is, I believe, the second revision of GDP that came in this morning at, let's see, where is it? Sorry, folks. It came in right at, uh, let's see, GDP. Okay, right here, 2.9%. 2.9% above expectations, 2.7%. In addition to that, real consumer spending is up. Okay, JOLTS job openings is down month over month. However, it is still higher than expected by not by much. Okay, pending home sales was beat expectation as well. So initially, the market did move down on this data, but I think the market just continued to focus on what Powell was going to say today. And based upon his comments throughout the entire Q&A session, the market loved it. Okay, so let's go ahead and take a look at the charts. The first thing is I'm going to look at the SPY weekly chart. All right. The SPY today closed above the moving average 200 on the daily, and this is the downward trend line for the SPYs. This is going to be a big test how we finish out this week. So far, you have an engulfing candle. It looks like a hammer on the weekly. There is 2 days left. So this is going to be a big test right here in this area, which is going to be about the 407 to 410, right around there. If we can break that, okay, over the course of the next 2 days and finish out the week with a strong candle and with volume, we need volume, all right. And you can see this week's volume is twice as much as last week, which is what you want to see. So if we can break that, I do think that the bottom is in. I'm not finished with my sentence. The bottom is in for 2022. All right. It is too soon to tell if it's in for, if we're going to go on a whole bull run. All right. If the markets are back. Actually, the Dow entered the bull market again today. So, all right. Something to keep in mind. I do think the bottom will be in for 2022 because we don't have a ton of data unless, well, we do have data in December, and that's going to be obviously the CPI and FOMC on December 13th and 14th. It is already expected the market's going to price in, right, 50 basis points so far, and also a even cooler inflation. All right. So expect this line to be challenged tomorrow. All right. If there's bad news, maybe on Friday, I think we pull back and we try again some point next week. All right. So let's hop over to the daily chart here. Okay. Daily chart. I mean, you can't argue with that candle. Look at that candle, right? I mean, we breached the moving average 200. 404 was our upside target this week. Okay. Excuse me. Our downside target was 393. We both hit it. All right. Best of both worlds. When I sold my puts this afternoon, as soon as he said, as soon as December, man, we made it a killing. Okay. Yes, it sucks to be on the wrong side, but if you have capital, all right, and you're playing lights throughout the day, waiting for the big event, you should have plenty of capital to play the upside. Okay, so the SPY closed at the 407 level. It is effectively filling the gap at the 408 level dating back to September 12th. Once we reach up here, 420 level, there's a small little gap here at the 420 level. All right. What I hate to see is another gap up in the morning that needs to be filled on the downside. So I hope that we have a nice mellow melt up versus a big gap up in the morning, because guess what? It's going to get a little choppy, right? So, what I expect tomorrow is as a retest, okay, of a retest of the moving average 200 at the 404 level. All right. Because with this kind of run up, if you don't back test, okay, the knife is going to eventually come. You need a back test at the 404 level in order for another leg up. Okay, just to retest. Okay, all right. So let's move on. All right, that's your SPYs, and we'll go ahead and look at the Qs now. All right, the Q did not we're not even close to the moving average 200, which I think therefore the Q is going to start getting magnetized. Okay, towards that 304. I'm sorry, moving average 200 is up here. It's about 306 level. Okay. We do have some gaps that needs to be filled here at the 303 to 308 level. There's a big gap here that needs to get filled. Now, mind you, we do have gaps down here that needs to get filled as well. Okay. So on the upside, I do think the Qs can hop over some of this volume gap here. All right. It's not going to be a straight shot, but I like to see a potential 290 to be tested. Okay. We broke out of the 282 level and went on a run. This is the prior breakout right here, about 289, 290. Okay. So I like to see tomorrow just a slight pullback. All right. A slight pullback to the prior resistance, which has been about 288, 289. And then we'll go from there. All right. So that's kind of my thought process going into tomorrow. All right. Let's go ahead and go to Apple. Okay. Apple engulfing candlestick. All right. And it's still got a slight gap to fill. So I think it's going to fill that at some point, maybe perhaps in the pre-market up to the 149 level. Okay. On Apple, this gap, well, it's just going to have to wait another day. All right. Actually, I want to take a look at the Qs weekly here. All right. The Q and SPY very similar, right? Nice big engulfing green hammerish candle. We're closing above the weekly 20 SMA so far. All right. Right up here at 298, 300 level is going to be a big test according to this trend line. All right. So we got to watch those levels tomorrow to see if, naturally, of course, if you're a bull, you do need to see a pullback. I mean, obviously, the market enjoyed the comments from Powell, but we need a nice pullback, back test some support levels, and then let's go ahead and make that run. All right. Real quick, here's the line chart. Okay, here's your line chart for the SPX daily. And as you can see, this is a VIX actually filled the gap on the downside. And so we're right here, very, very close to this level. Now, the SPX did have a gap to fill from 40.40 to 40.80, and it filled it today, right? It hit 40.80 exactly on the money and closed at 40.80 today. Pretty interesting all around here today. So, one thing I'll say is that these are the great days, right? And we wait for days like this to trade heavily and to trade heavier positions. And I don't mean by, just lotto and not care and trade recklessly. What I mean is on the chop days leading up to the big events, you could just play small, right? You could play small, trade a few candles here and there because since like what November 14th, we've been chopping around these levels. It's been very frustrating for a lot of you, right? And so we did our best to manage our cash positions, but when we catch a catalyst such as today, boom. All right, this is what this is the type of day that you want. All right, all the other days where we consolidate are just days where you need to be obviously a little bit cautious. So, with that being said, like I said, I am not optimistic yet that the bottom is in. But what I am optimistic about, or what I can say confidently, is that at least the Q and the SPYs and the SPX, at least we've seen the bottom for the remainder of the month ahead. All right. So tomorrow's December 1st, first of the month. And perhaps, hey, finally we get our little Santa rally.